information strengths. And no, just joking. It's Leon and I. We're coming to you all from Investing Education Academy. It is 2024, and this is our first live in 2024. It is January 3rd, and we are very excited to be here with you all. So let's talk about why we're excited to be here with you all. Because you all supported us all through 2023 when the market was recovering. And that means that you stayed with us through 2022 when the market looked like a toilet. So, we know it's not easy to watch us when things are going wrong. It's very easy to be involved in Investing in Education Academy when the market's just going straight up. The market overall is bottom left, top right. However, there are huge dips in between. You have things like the Great Depression, you have the Kuwait War, you have current wars happening, you have, elections. I mean, just everything that can cause the market to jump has happened, and more will continue to happen. You staying with us means a lot. Now, what does staying with us mean? You all have helped us get these podcasts up to a place where we're getting roughly 5,000 or more unique downloads per month, which is incredible. So thank you all. But we would love to have more of you inside our platform. Now we're going to do some recap, talk about what's happening inside the platform. We also are going to talk to you all about the various levels of membership. And before you think, oh, okay, they're just about to do a sales pitch, it's not that. Some people have contacted Leon and myself and told us they just don't understand what is inside of the platform or what comes with membership. So again, Leon, I've said it a million times, we're saying it again today. We're not promoting you only join Investing Education Academy. We are saying, without any type of doubt in our minds, you need to be part of some type of investment community beyond just doing it in your basement or on your laptop whenever you get a chance to, because there are just certain nuances and times where emotions will kick in and you're going to do something emotionally based that could potentially hurt you as an investor. Addition to that, the market's going to have dips. And I mean, I hate to say it, but misery loves company. When the market's dipping, you don't want to be just sitting there by yourself like, I must be the only one. Because again, it can cause you to do something, not in your best interest. And for those of you all who don't know, if you miss 10 of the highest growing or appreciating days in the stock market, it's the equivalent to missing almost 3 years trying to time yourself to get back in it. That is a statistical fact that has been put out there. If you want to research it, feel free to research it. But think about that. There are days when the markets will move 20% of a particular stock. And if you're getting in the next day, what normally happens when you have a 20% run in the stock is pullback. Mm-hmm. So not only have you missed that, but now you're getting in and receiving that pullback, which is putting you at a point where you need to make more money just to get to break even. Versus if you would have just stayed the course, which helps when you have a community. So what happens inside of this community that makes us, Leon and I, think is valuable for you all? Leon, you want to jump into it?
Yeah, I'll jump in with an anecdotal piece of evidence. So I don't know, a week or so ago, we sent out a yearly recap. We recapped our performance, being Brent, myself, and then IEA as a whole, as well as the market in general. And one of our members, shout out to Nick, he responded. And so Nick is notorious for saying that when the market is crap, and when it was crap in 2022, what he called therapy sessions. Nick loved for us to come on, and even though there was nothing positive to say, we were all feeling like hot garbage at the time, like we were all hurting. It was, Nick would always say, it's good to just talk these things out. Where do we see the market going? What is causing these things? Fed, wars, yada yada yada. So it was like a therapy session for Nick and for all the members that were on some of these particular Zoom calls. And so that's part of like kind of being part of the community, just kind of having that communal feel. Another thing he said was that Nick had I'm not gonna put his return out there, but I don't know if he wants me to, but his return was north of 50%. Just say that. And one thing he said was he specifically said, he had this high return because being part of IEA, and particularly Brent and myself. So again, we're not ones to toot our own horn, but we're pretty good at this. But somebody like Nick, who's not a professional investor at all, he's He only really knows investing primarily because of Brent. He started working with Brent years ago. Then he joined IEA, and that's kind of been his investing ecosystem. It's really been us. And he also said over the last 3 years, he's right about, let's just say, north of 25%, pushing 30%.
Really?
Nick's portfolio has been killing it relative to, I mean, I remember benchmark is always the S&P 500. S&P 500 on average returns 10% per year. So Nick has been killing it as being a part of, being a member of IA. And this is for somebody, again, who doesn't do investing professionally, isn't really, this not really his thing. He enjoys investing, but his thing is not the research. It's not finding the stocks that are investable at the time, not finding the sectors. That's our job. And then we relay that to our members. So that's just an anecdotal piece of evidence that we actually got today, an email from Nick today about those stats that he has, and how he felt and how he feels about me being part of IA, especially in the good times and definitely in the bad times.
Well, that's great to hear. And for those of you all thinking like, well, that's great for that person, but what about me? How does that help me? When you're inside of our platform, we have information related to trends going on in the marketplace, stocks to watch. Even sometimes there have been, I'll call it myself. There was one particular time Leon did a hot seat, and it had to be when the market was getting crushed. And he found a stock that was returning. I don't think he knew he found this stock that was returning. It was like 500 some percent over the last like 5 years. Yeah. And when he was doing it live, I went and like looked up this 5-year returns thing, and I was like, Leon, do you know what the 5-year return is? And I was like, my mind was blown. Even at the time when he positioned the stock, I think it was a different stock that he introduced one time, and I had never heard of it. And that stock was doing about 42% or something in a down market. And that's when we started looking at like the stay-at-home stocks versus what was happening in large industrials. And these are places where normally I personally wouldn't have looked. I've always been a really tech heavy person, but making some of those switches, even in the home markets, the home markets were absolutely demolishing returns in regards to beating returns of the S&P 500 for a good amount of months during 2022. And me moving a portion of my portfolio increased my dividends. It helped stabilize my overall portfolio, which was very volatile. Everybody knows I'm a proponent of like single stock risk. I've done it. I'm not a proponent. Let me take that back. I don't find it when,
like you're comfortable with it.
Well, that's why I even changed it. I'm not even comfortable with it. It's when it makes sense from my years of experience, I'm willing to do it. That is not something that I would promote for anybody to do. I think single stock risk is you're gambling at that point. You're no longer investing. But in this platform, we have news. We have other members that are talking to each other about what's going on in the marketplace, what they're doing, what they're not doing. And Leon is a research jargonaut. So, he's putting information in all the time to keep you abreast on just information you're not going to go out and find. So inside the platform, it really is a lot of use and functional. It's a functional platform that allows you to be a better investor and to be engulfed in a community that is surrounded by good information about the market.
One other point I want to make is about that is just another kind of tidbit on how we've helped our community. So in October of last year, and Brent, I think you may have been away. I'm not sure if you were on this live, but sorry, not live, on this hot seat. So I did a hot seat, and the hot seat was regarding so what happened last year was tech stocks ran. Tech stocks were like 90% of the returns. The S&P 500 is made up of 500 stocks. But crazy thing is, last year, only 7 of those stocks, you all may have heard the term Magnificent Seven. Those 7 stocks, Google, Facebook, Amazon, the tech stocks we all know, Meta, they accounted for like 90% of the returns in the market up until about October, November of last year. Then what happened was in October, the bottom. So remember, S&P 500 is 500 stocks. The bottom 493 stocks then started to kick in and get some returns. So in October of last year, just because I kind of know how seasonality works and kind of how the market works, I would say, hey, I did a hot seat pointing out the particular industries that were that make up that other 493 stocks inside the S&P 500. And I was saying, hey, if you're looking at something to buy right now, tech is run. Like tech is up, 30-40% for the year. look at some of these other sectors: industrials, materials, retail, what have you. At the time, that those sectors, or the 493, other 493, they were down about 10%. Now, since October, those stocks ended the year up about 10%, right? So you're talking about a 20% return in essentially what, 2 or 3 months. Had had anyone that saw that actually listened to it and actually went and bought some of these different stocks in these different sectors, you would have seen a 20% return in essentially 2 months. So again, that goes back to what is going on inside the platform is we're sharing information like this, and I definitely did. I jumped on a lot of these, especially the industrials, and I've some of them are up anywhere from 40 to 60% since I did that October hot seat. So again, this is our job to find stuff like this for our community, and that's what we do, and we definitely take pride in.
Yeah, and also we're there to answer questions. I mean, but it's about what you put into it that helps us determine what you want to hear and what we give you answers to. So, with that being said, even on these lives, this is you all's opportunity to ask us questions. We want you to ask us questions. We'll answer them as we can. And the big thing, why do we say as we can? Because we don't want to lie to you all. Like, since we started, we told you we're not gurus. Don't follow us to the ends of the earth, and everything we say is the gospel. You have to do your own research. But what we can do, and I think this is something we don't talk about a lot, is we can help you figure out what type of investor you are. That's something that has a lot of value in it, because most people don't know. They are investors because they think they're investors, but in reality, they're trading stocks.
Mm-hmm.
They're traders. They're not investors. And then they're like, well, what's the difference? And it's like, what's the difference between a swing trader and a day trader? Well, what's the difference between a person that has short-term capital gains and long-term capital gains? And how do I know what my asset allocation model is if I'm not running Monte Carlo reports? And what's this Fibonacci about?
I've been a trader, did it for years, made a lot of money, lost a lot of money. It's you're up at night. Trust me, I've had a lot of money at risk some nights where I literally, and I'm not joking, literally did not get any sleep. I would have my phone laying next to me at night. I would check it literally every 5 minutes. Like, I'm telling you, like, I've done the trading thing. People, they say how you can make all this money. Theoretically, yeah, but practically, I mean, one of the things I'm working on right now, the other side business where the trading app I'm developing, part of the research I'm doing is, shows that basically retail investors, individual investors, underperform the market by 50%, right? So think about that. S&P 500 returns 10% per year. That means individual investors are only returning 5% or less per year and again, this is on average. So that means individual investors are leaving billions of dollars on the out there in the market that they're missing out on. And a lot of that is because a lot of individual investors are traders. They're trying to be these traders. They're trying to do short-term trading, trying to time the market, trying to get in and get out. Like Brent said, capital gains tax then comes in, short-term capital gains. You get hit a lot harder than long-term capital gains, which is holding a stock for more than a year. When you're trading, you're only holding it for maybe a day, 2 days, maybe a couple months. So the trading thing, I do not recommend it. Again, do what you do. Do your own research. If it works for you, great. Are people out there making money at it? Absolutely. I would like to say 99% are not. So that's why, we really focus on long-term investing. We always say, when you buy a stock, look at it as an asset, as a company you're buying, not something to trade. You want to hold on to for at least 3 to 5 years. And they know that served Brent, myself, and a lot of people in the IA community very well the last 3-4 years.
Yeah, and also too, let's be clear. We are not idiots. So when it's time, when COVID hit, we made investments during COVID that we know, I know Leon and I would not have made otherwise.
Mm-hmm.
We got out of those investments earlier than the 3 to 5 years because those were investments we wouldn't have made anyway. So we do know when to kind of take a little bit more of a risk than other ways, because the historical performance of the market during certain traumatic events leads us to understand what the behavior of the market will be almost regardless of what happens.
Mm-hmm.
So these, when you see us, when we say the 3 to 5 years, yes, that is normal. But I know some of you all thinking like, you all must do something different than that. Yes, we do. But we also shared with the community because, again, if you are a member of IA inside the platform, really, I think we did lives on it too. Mm-hmm. November 2021, we told everybody the market is about to see a major swing down and that you need to start thinking about reallocating your account. Also, in October 2021, October, November, I think around that time frame too, we started saying, check your cryptocurrency platforms reduce your exposure to cryptocurrency, and start to move towards these stable coins. And that had to be October or November 2021.
Mm-hmm.
Needless to say, after those announcements, I would say within 3 months, people were losing their minds because the market had just went down. But when you're part of these communities, you hear about these things. Some people act, some people don't, and we can't control that. But you at least say you knew it might be coming. And then we're not going to predict every situation. So we've had members who told us to look things up. Check out this new crypto on the market, or I heard this new digital dollars coming. Like, can you do some research on it? And we've done it, and we end up doing lives on it. So that's that. Now we want to talk about the different levels. So in the community level, what is community membership in IEA? Community membership in IEA means you're coming in and you're getting all these articles. You have access to some of the groups inside of the platform, but you're really a part of the community internally, which gives you the ability to ask us the questions and to see the updates when we're talking about stocks to watch or things that you should be aware of in the market. It's really basic, and it gives you a great start to understanding the market. Now, when you move on and you become an insider, which we are running a New Year's special with the insiders. So you can get the insider membership 50% off for anybody who is a new insider to Investing Education Academy. 50% off of the monthly subscription. So you definitely want to check that out. But with the insiders, you actually get to look at all the stock picks we made since we started IEA. Now, we're not still holding all of those, and we have heard the request. You all want to know when we're selling stuff. We do post that as well. Now, is it always real time? No. Nor have we ever said it would be real time. But we do post when we sell, and we do updates on some of the things we're doing in our portfolio. So the insiders get to see that. And where Leon was talking about the hot seat, and where I told you there have been moments where I was shocked on the hot seat myself. And you know what? There was a member one time, it had to have been back in 2020 maybe. She was in the hot seat, and we were reviewing her portfolio. And she had a marijuana company I had never heard of before. That thing did like a 70% run up after I made that purchase. And I sold it. It started to come down. I think I sold it and still made a 50% profit. And it had to be within a 2-3 month period. Mm-hmm. So things like that are reasons why you want to sit in on these hot seats and why it's gold sitting in there. But I digress. But you get to be part of these hot seats, which we do every first Saturday of the month. We have one coming up this Saturday. And now we heard the request. We're actually deconstructing portfolios of some of the most wealthy funds in existence. Some very popular stars we have access to, publicly, of course, access to what they're holding. We're looking at what their holdings are. Some fund managers looking at their mutual funds, ETFs. We're looking at, hedge funds. So we're looking at a lot of different portfolios of people who are paid a lot of money to manage them. And we're doing the research for you. We're talking about it with you. You get to sit in on these and go, well, when we looked at Warren Buffett's portfolio, that was enlightening. And so you want to be a part of these things. And at the insider level, you get that access. Also, we have what's called the Portfolio Panthers. Now, the Portfolio Panthers is a whole different beast. They have access to everything inside of Investing Education Academy. And our goal is to get to 15 Portfolio Panthers, which I guess you can think of it kind of like the sharks from Shark Tank. We invest together. We're investing in private equity deals. We're investing in real estate. We're investing in raw land, which will be included in real estate. But we're looking to get into a different form of real estate, which is wholesaling properties. So that is the next piece for us. But recently, we made an acquisition into a marijuana company, and that is a very exciting thing because I want to say the company we bought into, they included us in their friends and family round because we're IEA. I really believe firmly that if we weren't Investing Education Academy, they would not have held the position for us, which we completely appreciate. But these are benefits of membership, and we purchased land in Ghana in probably 2021. That land, I mean, I feel like it was before we even landed back in the U.S. It already started to appreciate, and so these things are only happening because we are putting in the time. We're doing the research. We were going to buy into a property in Morocco, but we're at a place now where we don't just blindly buy things. We actually flew out to Morocco to see if it made sense, and it didn't.
Did not.
And when we got there, we were like, "Oh, this is not going to happen." So we saved our group, the heartache of making an investment into something that we didn't really have a lot of knowledge about, and probably would have been stuck with that investment. These are one of the this was really cool. Leon and I were about to get on a plane to go check out a jet for a company that we're part owners of. It's called
now they're called they were called Jet Token. Now they're called Jet.ai. They were a private company, and they just had a reverse merger and are now a public company. And we had bought into that company prior to them essentially going public. So we were invited out to, I think, Arizona to actually see see these jets, sit on them, take a walk on the tarmac. That whole thing. We didn't get a chance to do it, but it was just cool, the fact that we were involved in that. We had that invitation to go do that. We could do it at the time, but these are the type things we're doing with the Panthers. And real quick, I just want to say on the marijuana company. So it's a marijuana dispensary out of Chicago. It's really cool. The really cool thing about this is that it's started by 9 African-American women. And part of their goal was to have, the minority community take part in this new burgeoning industry that is marijuana. When, quite frankly, a lot of people that, minorities look like us are actually in jail over some marijuana issues. So there were, and another cool about Chicago is they actually have almost like some set-asides for minority investors, for minorities to take part in this new burgeoning dispensary business. So we bought into that company. It's in Chicago. I think by the end of this year, they should have 3 to 5 dispensaries open. They just opened their first one September of last year, and they're working on the second one now. So really, really cool to get in on the bottom floor of. I mean, I look at it as, like it or not, I almost look at it as like alcohol. Back in the 30s and 40s, the bottom floor of it. We know what that turned into. So we're hoping that this company we bought into will. Another thing about that. Them is also they actually have interest right now from a VC firm who wants to invest in them. So we'll see what happens. But it's an exciting investment that we made.
Yeah, and I'll add this part to it. I'm going back to the land piece in Ghana, because we now own that land. Our neighbor 2 sections over recently built a restaurant on the back of his property, which is going to additionally increase the revenue to our property. And we are in conversation with him now about doing some type of partnership to possibly build out our beachfront property. So when people visit his restaurant, they also have a place to stay. So now that will turn his restaurant into like this whole destination type of venue. And in addition to having that destination, people could now spend the weekend at the beach by using and renting from us our land, or what we build on our land. These types of relationships wouldn't happen if we didn't fly out to Ghana and walk the walk the beach. It's not like it's real work, right. but to walk the beach and meet our neighbors and spend time with them. So these are things that the Panthers are doing. And another piece to what Leon said now about the Jet Token, or Jet was
.ai, I believe they're called.
.ai. We don't hold us to the name, but it used to be Jet Token.
Yeah.
And so the other cool part about that is opening up your email one day and receiving a letter saying the company is now public. You can convert your note into actual shares of this new publicly traded company. That is an absolute win, especially when it opens through a SPAC, which means that the value of each share when it opened was at $10 when you got in at 90 some cent per share. So huge win. I mean, that's one of those things you hope to happen. So it's not just about getting into these investments, because we also had one investment where we got a letter and the person said they're not going to be working anymore. And because we spread out our risk among the other Panthers, it's not a letter that just one person got from investing their life savings. It's a small amount that this person invested and this person invested, this person invested to make the amount big enough to invest in the company in diversifying our risk. Also, with the Panthers, where we're headed, we have people now. We have somebody actually presenting to us on Sunday in our pitch competition because they went to our website, and it's the IEA Portfolio Panthers.com, and they submitted a request to pitch to us. That's so cool. So it's like if we can, and I'd say in the beginning it's similar to like Shark Tank, but a little different. That portion is very similar to Shark Tank, where people are pitching to us, and we're deciding if we're going to invest into these companies. But this is where we differ. The skill sets inside of the Panthers are so great. We have the ability to actually help that company grow if we choose to become more than just passive investors. And that model, I mean, if one or two of these companies hits it and runs, I mean, it can be life-changing. And so, we would love for you all to come, but that's what's happening inside the portfolio. And for 2024, we are going to be, looking at how we're structured, what value we're giving to our members. People probably will start getting some calls from Leon and I inside of the platform asking, what is they want, how do they feel about it, what needs to be improved, what's working great. You should be a part of that. If you want to be part of a community, we are actively improving. I mean, people told us things they have called us and told us what they don't like. And we listen. Sometimes we didn't agree. Sometimes we did agree and we changed it within like a month. So we are agile. We're working to be a better platform, and we are going to grow. And we want to get back out into the world in person and start doing some events where we're actually talking to people real time, face to face. So that is what's been going on with IEA. We want to say Happy New Year, and going into 2024, look for, seeing us in different environments, maybe some different information. You might see some guests included on some of these lives, but also go to YouTube and search Investing Education Academy and subscribe to that station because it'll keep you in touch with what we're doing. Leon, did I miss anything?
No, that was pretty much it. One thing I just wanted to recap for just to again just to give insight of what we're doing and how we're actually doing it. So I just want to give a quick recap of our returns for the year.
Okay, so all right, before he says the returns, just understand we've been doing this for a long time, and this is not indicative of the market as a whole, nor are we guaranteeing anybody who joins IA will get these types of returns. I forgot you were going to do this part, so I was like, look, I know what y'all about to hear. Just, yeah.
Okay. So just to preface it, Brent and I had an awesome year. I mean, there's no another way around it. Our returns were out. I mean, our returns were way in excess of what we even expected, which was great, But again, this is and like Brent said, this is like the returns we got last year are not normal. They're kind of close-ish. I mean, they're off by a couple tens of percentage points, but we have good years. We generally have good years. We had a really great year last year. So just recap: Nasdaq was up 51% last year. S&P 500 was up 24% last year, and the Dow was up 23%. Sorry, it was up 13%. So that kind of gives you, average. So we really track the S&P 500 for our returns typically. So it was up 24%. If you want to track net tech stocks, they were up 51%. Our IEA portfolio. So along with IEA, Brent and I set up a separate portfolio for the company where Brent and I manage that. That portfolio, the IEA portfolio, was up 53%. Then Brent's portfolio, his personal portfolio, was up 71%, and then my portfolio was up 115%. Like I said, these are awesome returns, and we're not. And trust me, we're not poo-pooing them. Like, we work to get these. We're not just saying but we definitely had awesome years. Like I said, this is not indicative of our annual returns, but we Brent and I would say our baseline for ourselves is at least double the returns of the market. We expect to do at least 20% for ourselves. Minimum. We expect to do minimum 20% for per year. So these returns are way in excess of that, which again we're thankful for. We know this is not normal, but we'll take it, especially after 2022. So that's how IEA as a whole, the company, Brent and myself, did last year. We did really well. We expect going into this year for for this year to be another good year. We don't expect it to be this good, but there's certain reasons. It's election year, which is the biggest one. Typically, again, on average, election years are up more than the market for whatever reason. Who knows why?
It's volatile though. It's going to be a volatile year.
Yeah, true.
Yep. But the reality is the U.S. doesn't care who wins. They just want us to know who's going to be in the presidency.
Right. They just care who's in the like the market just wants stability. They want to know, okay, if it's Trump, if it's Biden, whomever, as long as we know who's in there, none of all this craziness afterwards, a clean win, and we move on. So but typically election years are big years for the stock market. So we're expecting at least minimum 10% for the market, 20% Brent and I for the year.
Yep. And we owe you all 2 stock picks, so you'll be able to log in to the Investing Education Academy platform via IEAmembers.com to see what those stock picks are. And we are going to stay with the schedule of every other month. So, every other week.
Every other week, yeah.
So we will see you in 2 weeks. And after that, our next one, I think I one after 3 from now, actually is going to be in a surprise location. So we're going to So you have to keep watching to see where we end up. Everybody, we thank you for being with us all these years, now going on almost 4 years.
Yeah.
So we thank you all. I think April is our official kickoff month in 2020. And we look forward to being here for the long run. Everybody have a great day, and we'll see you later.